Let's get back into the
Let's get back to Ben.
When you look at, I think even some of the charts that come from the Fed is that bank lending to individuals and companies is going down. And when you look at the assets on a lot of the balance sheets of banks, the holding of federal securities is actually up. And one of the things that I believe is happening today is there's an arbitrage today of banks being able to borrow at a very, very low interest rate and basically reinvest that money in treasuries or mortgage-backed securities issued by Fannie and Freddie. And so there's really not a lot of incentive to bring new capital to the marketplace.
I don't think that's true. We're actually very careful to tell the banks not to do that because it is actually a risky thing to do. If you're taking very short-term money and investing in longer-term securities, it's true that you can make some money in the short term, but you're always risking capital losses, which could be quite dangerous. So we pay a good bit of attention to the interest rate risk that is assumed by the banking system. I think the reason banks aren't lending is because either because lending requires capital and they're unsure about how much capital they have or will need, or more generally because they feel that either the risks in the economy or the lack of creditworthy borrowers is constraining their opportunities to make good loans. But as the economy improves, I'm sure that they will return to the credit markets.
The gentleman from Missouri, Mr. Cleaver.
Thank you, Mr. Chairman.